After 10 hikes by the Fed of the Fed fund rate, they halted this past month. The federal funds rate is unchanged, left at a range of 5 to 5.25% after the last week's meeting on Wednesday. The Fed fund rate has nothing to do with mortgage interest rates. Let's be clear. That is an overnight rate borrowed between banks. Actually, when the Fed raises or hikes or lowers their Fed fund rate, the only thing they do it for is to slow down or increase the economic activity and to curb inflation. That's all. So they've been hiking the Fed fund rate for one and one only reason: to curb inflation. On inflation, two very important reports came out last week. One was the consumer price index that showed inflation dropping from 4.9 to 4%. And when we take out the food and energy prices, which are most volatile, we get the core rate, and the core rate actually increased 0.4%, but on an annual basis it still declined from 5.5 to 5.3%. Why is the core so much different than the overall? Well, because stubbornly high cost for shelter and used cars is what was the main contributors to the inflation, core inflation numbers last month, because shelter represents 60% of the total increase. Shelter costs are actually falling in real time. What I mean is Apartment List's latest rent report showed that year over year rents dropped, deaccelerated by 0.9%, which is the lowest level since May of 2021. But the numbers in the CPI report are unfortunately lagging. On the wholesale front, inflation dropped by 0.3%, and it's now down to 1.1%, its lowest level since December of 2020. Again, when we look at the core numbers, taking out food and energy, it rose 0.2%, but the reading still dropped on an annual basis from 3.2 to 2.8%. What is the bottom line? March of last year, we saw 11.7% wholesale inflation. Right now, we're at 1.1. We're certainly going the right direction. On the employment front, new claims for unemployment were reported at 262,000. The total number of unemployed right now collecting unemployment is 1.775 million. Bottom line is, there is a clear upward trend in unemployment claims and a weakening in the hiring. With the Fed focused on employment data, this is a very important report that was released last week because it does show the labor market weakening. And it also does when unemployment drops and then starts upticking. That's one of those signs of recession I've been telling you all about. That's all I had for you today. Beata Bukowski, Fairway Independent Mortgage.